Now, on Monday, which is yesterday, the benchmark Sensex fell about 600 points and Nifty 50 moved near the 23,350 levels, and that is the opening for today as well. The overall market capitalization or MCAP of BSE-listed firms has fallen nearly 418 lakh crore rupees from nearly 424 lakh crore rupees in the previous session, making investors lose about 6 lakh crore rupees or so just on the BSE. Now, what exactly is driving this downward momentum in India's stock market? First up, the obvious answer are Trump's tariffs. US President Donald Trump has been dealing blow after blow to market sentiments, not just in India, but across the world by way of announcement of multiple tariff policies. Now, the latest chip on the block was Trump announcing a 25% tariff yesterday on all steel and aluminum imports into the US. Trump further told reporters that he intends to introduce tariffs on cars, semiconductor chips, as well as pharmaceuticals. So that is keeping markets on the edge. Now, specifically on the Indian markets, there are stretched valuation concerns despite a correction in the stock market. The Sensex has corrected over 9% from its all-time high of almost 86,000 levels, which it hit on 27th of September last year. However, despite this correction, market valuation remains fairly high, keeping investors cautious. Then, of course, we had the earnings season. Q3 earnings reported a weak earnings season, and a major factor behind the ongoing correction in the stock markets happened to be the Q3 earnings, which, while they were marginally better than the last two quarters, but failed to boost investor sentiment. Now, add to that, with Donald Trump in power and the strengthening of the US dollar index, there's been a relentless outflow of foreign capital. Indian markets have witnessed heavy FPI outflow starting from October last year all the way till Feb. In fact, so far in the month of February alone, and we're just sitting on the 11th of February today, foreign institutional investors have offloaded Indian equities worth 10,000 crore rupees and counting. Now, with the US dollar index strengthening, the direct impact is on the rupee weakening in respect of the US dollar. The Indian rupee hit fresh record low yesterday. It slipped 52 paisa to an all-time low, climbing down almost 88 rupees against the US dollar. The domestic currency has declined nearly 3% this calendar year alone. That's right, a 3% decline in the INR in the month of Jan and the first 10 days of February 2025. And all of this is weighing heavily on market sentiment. Some investors are continuing to say that the worst is not over yet, and the next 3 to 6 months should be waited and watched for.